Welcome back to the Pro Ticker Deep Dive. We are moving beyond the headlines today and diving deep into what is really the literal infrastructure of the future, robotics. For the longest time, when we said robots, I think most of us, we pictured those massive static arms welding car bodies on an assembly line. A very specific, heavy industry picture.
Right. And while that image is, it's still accurate in a way that industrial application is absolutely still the core revenue driver, the sheer pace of change has completely shifted the landscape. Robotics isn't just a sector anymore. It's truly a full stack industry.
A full stack.
Yeah, it's moved from those, isolated caged factory floors to transforming almost every element of daily production, supply chains, and professional services globally.
So we're not just talking about incremental improvements in existing machines.
Not at all.
We're talking about massive, accelerating global market growth. And it's driven not by some kind of technological curiosity, but by what feels like a fundamental, non-negotiable economic necessity. The sources you've brought us they're dense with statistics that don't just hint at growth. They document this unprecedented explosion.
And that's the mission for this deep dive. We're going to synthesize a detailed analysis of the current robotics landscape, based on the latest global reports. We need to meticulously break down the sheer scale of deployment, look at the massive financial drivers, and then zero in on the critical shifts that are happening.
Both where the automation is happening and how.
Exactly. Geographically, where are they being deployed? And technologically, how is AI really fueling this next wave?
It sounds less like a typical industrial report and more like a roadmap for the next major global infrastructure cycle. So let's lay that foundation. The big question we need to answer is, what are the core forces? Things like labor shortages, wages, and critically, this idea of reshoring that are making this investment mandatory. And, where's the future of automation actually heading?
Well, if you look at the raw data, the answer is compellingly clear. These forces, they aren't just influencing the market, they're acting like a powerful, unavoidable gravitational force pulling capital toward automation. They're the engines of the market right now.
Okay, let's unpack that core first. Before we jump into the mind-boggling scale of it all, we need to clearly define the backbone here. When we talk about industrial robots, what are we actually talking about?
Right. So industrial robots are a very specialized category. They're defined by their application, which is manufacturing. Think programmable, multi-axis machines, usually articulated arms designed for high throughput and multitasking.
So welding, material handling, that kind of thing?
Exactly. Welding, heavy lifting, precision assembly, painting, all of these repetitive, complex tasks that they can perform with a level of reliability and precision that, frankly, humans just can't match over long shifts.
And what's so fascinating is that the data shows this is an industry that is simultaneously mature. It's been around for decades. Yet it is showing growth figures you'd expect from, a new tech startup.
That's the paradox, isn't it? The industry is mature, yes, but this sustained massive growth is just unprecedented. To really grasp the scale, we have to look at the foundational stats from the 2024 snapshot. The sheer volume of new machines entering the global workforce is staggering.
Okay, so give us the headline number for 2024. How many new installations are we actually talking about?
The current expectation for the global market is the deployment of 592,000 new industrial robots in 2024.
592,000.
In a single year, yeah. And just to put that into perspective, that number is a record high for annual installations. We saw a tiny dip in 2022, about 2% below the 2021 peak, but the overall trajectory is just steeply accelerating.
So nearly 2/3 of a million new automated workers in 1 year. And the sources note this volume is actually more than double what it was just 10 years ago.
It is.
That confirms it. We're in the middle of a generational exponential leap in automation.
And this rapid adoption translates directly into a massive financial scale. The global market value for automation equipment, which we measure by capital expenditure, or CapEx, is projected to hit a colossal $16.5 billion in 2024.
A $16.5 billion investment in 1 year. Let's pause on that. That's a 9% increase from the previous year. What is that CapEx actually paying for? Is it just the cost of the steel and motors?
Oh, not at all. That 9% year-over-year increase is a strong signal, but it covers much more than just the hardware. CapEx in robotics includes the robots themselves, of course, but the real cost drivers are things like systems integration, specialized tooling, and software.
So it's not an off-the-shelf purchase.
No, not for these applications. Installing a complex robotic welding cell, for example, requires huge investment in custom jigs, advanced sensors, safety caging. software development. That $16.5 billion, it reflects companies committing to a total factory overhaul, not just buying one new machine.
So the flow of new robots is huge,
Hmm.
and the capital for integration is enormous.
Ah.
That's the annual flow. What about the total population? How many of these robots are operational right now?
The total operational stock of industrial robots is projected to reach 5.4 million units in 2024.
5.4 million.
A massive automated workforce already in place. But here's the most compelling projection for investors. That stock is projected to grow to 6.7 million by 2028.
Okay, so that's nearly a 25% increase in the total working population of robots in just 4 years. A quarter more capacity in less than half a decade? That's an army of automation.
It is. So let's move from the what to the why. What are the underlying forces driving companies to commit $16.5 billion in CapEx every year?
The sources are really clear on this. It isn't just about optimization. It's a response to, well, existential pressures.
Precisely. There are three dominant forces. First and foremost is the relentless pressure for automation amid acute labor shortages and rising wages. This isn't just in one region. Developed economies across Asia, Europe, North America, they're all struggling with demographic shifts, aging populations, and post-pandemic labor dynamics that make finding skilled manufacturing staff incredibly difficult and expensive.
Which totally transforms the investment decision, right? It's not just an ROI calculation on saving money anymore. It's about solving a fundamental capacity problem. If you can't hire the people to run a third shift, the robot fills that critical gap.
Absolutely. The robot guarantees productivity. It guarantees operational hours no matter what the labor market looks like outside the factory. And the second major driver is geopolitical. It's strategic. And it's that word the sources keep emphasizing, reshoring.
We hear that term reshoring constantly.
Uh-huh.
What does it functionally mean in the context of this robotics investment spike?
It means bringing production back to domestic or nearby high-cost regions. We're talking major economies. The US, China, Japan, Germany, prioritizing securing their domestic supply chains.
But moving production from, say, a low-wage country back to a high-wage region like the US or Germany, theoretically, that should kill your profitability immediately.
That is the core challenge that mandates automation. If you move an assembly line from a region where labor is maybe $3 to $5 an hour to a domestic region where it's $30 to $50 an hour, you have to compensate for that 10x differential.
And automation is the only way to do that.
It's the only viable economic path. You can't afford to make that move without simultaneously increasing your robot density to offset those higher domestic costs.
I see. So reshoring isn't just relocation. It's a mandatory structural demand driver for automation. Policy decisions on supply chains directly translate into demand spikes for robots.
Exactly. And the companies in this space, the big manufacturers like Fanuc, KUK, ABB, and maybe even more importantly, the systems integrators who install these complex lines, they're positioning themselves to benefit directly from this.
That sets the stage perfectly. We have a massive, growing industry driven by essential economic and geopolitical mandates. Let's follow the money then. Let's analyze where these new automated factories are actually being built. If you ask someone where the pinnacle of industrial automation is, they might think of, I don't know, Germany or the US. But the sources reveal a geographical center of gravity that is overwhelmingly, almost impossibly centered in Asia.
Asia is the undisputed, crushingly dominant epicenter. In 2024, fully 74% of all new industrial robots installed globally were installed across Asian nations.
74%. Let's put that in perspective.
In India.
Europe was 16%, and the Americas just 9%. So for every one robot installed in North and South America combined,
Nearly 8 were installed in Asia.
that is a staggering difference. An order of magnitude.
It absolutely reshapes our understanding of where global manufacturing capacity is focused. This isn't just the world's factory. It's the world's factory that is rapidly automating itself. And let's deep dive into the specifics, starting with the titan that anchors this trend, China.
China is a fascinating case because it's not just the world's largest consumer of automation. They're also rapidly building their own domestic supply.
That's the strategic genius of it. China is, by far, the world's largest national market. Their installation numbers saw a stunning surge, up 28% in 2024.
28% on an already enormous base. That pace is incredible.
Yep.
But the strategic piece is the domestic production.
Right. What's truly critical here is the rising self-sufficiency. Chinese domestic robot manufacturers are gaining share and maturity. In 2024, more than half, an astonishing 57% of the robots China installed or its own domestically produced brands.
Which is a crucial indicator.
It's huge. It means China isn't just buying automation, it's controlling both the demand and a growing part of the supply side. It's positioning itself as the world's self-sufficient leader in automation.
That insulates them from global supply chain shocks for this kind of hardware. They're keeping the revenue and the intellectual property at home.
Exactly. It's a closed-loop system for national advantage. Now, let's look at two other Asian powerhouses, Japan and South Korea, which show a real contrast.
Japan, a historical pioneer, is still critical.
Correct. Japan is the second largest national market. They installed 44,500 units in 2024. The growth rate is much steadier than China's, but it's contributing to a solid 10% operational stock growth. Japan remains a critical driver, especially in high-precision manufacturing.
And then South Korea, which has the highest robot density in the world, but the sources point to a recent dip.
That's the nuance here. South Korea installed about 30,600 units in 2024. Still a high volume, but it's a significant decline from their record levels in 2022.
So a cyclical slowdown.
It suggests that, yeah, perhaps some temporary capacity saturation or economic headwinds impacting CapEx, even while the global trend is up.
So within Asia, we see aggressive expansion in China, steady modernization in Japan, and a temporary contraction in South Korea. But together, they just dwarf everyone else. Now let's look at the remaining quarter of installations, Europe and the Americas.
Okay, moving to Europe, the dominant player is, and always has been, Germany. It's not just a major installer. Germany holds 32% of Europe's entire operational stock of robots.
The foundational leader.
Without a doubt.
But did that trend of slowing installations affect them too?
It did. Installation volumes in Germany in 2024 were about 24,900 units. Substantial, but it actually fell below their second best year ever. Overall, Europe saw a slight decline in 2024.
The continent's operational stock is massive, but the immediate pace of new investment has slowed.
Right, perhaps waiting for stronger macroeconomic signals.
So how does that compare to the Americas?
The Americas are firmly anchored by the U.S. market, and the U.S. is showing exceptionally strong growth in its robot stock, an impressive 40% stock growth in 2024. That brings its operational total to over 350,000 units.
A 40% stock growth in 1 year is way more aggressive than the other regions.
Yeah.
What's fueling that?
It's systemic. It ties directly back to that geopolitical driver we talked about. This growth is fueled by major investments from not just U.S. firms, but strategically from Japanese and European companies building or expanding manufacturing in North America.
So this is reshoring in action.
Exactly. Global firms want redundancy and proximity to the U.S. consumer market, and they can only make that financially viable by building highly automated factories.
So the U.S. robot boom is, in a way, an indicator of the global movement of capital and production.
Precisely. And the key takeaway is the variation here. Asia is charging ahead, the U.S. is experiencing strong growth from international investment, and established markets in Europe and South Korea show signs of a cyclical slowdown. It's a market that's highly reactive to national policy.
That makes the $16.5 billion CapEx figure feel less like a budget item and more like a measure of global strategic maneuvering. Okay, so we know the scale and the geography. Let's pivot to where these 592,000 new units are actually going.
The automotive industry has always been, and remains, the single largest adopter. It's the historical engine driving demand because it's where precision welding and painting became industrialized.
The numbers confirm that, especially in the U.S., where the auto sector was about 1/3 of all robot installations in 2023.
Right. But the critical shift happening now is the transformation to electric vehicles. And this is accelerating automation demand even further than historical cycles.
This is where it gets really interesting. Why does producing an EV specifically demand more robotics than a traditional car? It's not just swapping engines, is it?
It's a radical departure. It's centered around battery production and electronics. The production of EVs, specifically the construction of those large, complex battery packs in gigafactories, mandates extreme levels of automation.
Can you elaborate on that? What's so hard about making batteries that requires robots?
Well, consider cell stacking. Battery cells have to be stacked with micrometer-level precision to ensure stability and prevent internal shorts that could lead to, fires.
Thermal runaway.
Exactly. A human worker simply cannot maintain that consistency over an 8-hour shift. But robots, using advanced vision and force sensing, achieve it reliably.
So it's not just about speed, it's about quality and safety.
Absolutely. Robots handle the intricate assembly, the precise welding of battery tabs, deploying sealants. Then you have robot-mounted AI vision systems that perform instantaneous quality control. The sheer scale and accuracy demands of a gigafactory make automation the only solution.
Okay, beyond automotive, what's the second largest user? And where are we seeing rapid expansion now?
The second largest is the electrical and electronics sector. But looking at new growth, it's robust in what we call new customer industries. These include internal logistics, consumer goods, and the food and beverage industry.
So anywhere with high volume or hygiene requirements.
Precisely. In logistics, it's warehouse navigation and sorting. In consumer goods and food, they manage diverse packaging, delicate sorting, and strict sanitation and inspection at speeds impossible for manual labor.
So we've diversified the applications. Let's look at the horizon. What does the industrial robotics outlook look like leading up to 2028?
The sources are overwhelmingly positive. Despite some short-term macroeconomic challenges like interest rates, the structural growth in automation is expected to continue strongly.
And what are the high-level projections for that cycle?
The International Federation of Robotics projects that annual robot installations will reach a staggering 800,000 units by 2028.
800,000 annually.
Yeah. It implies a sustained mid-single-digit annual growth trajectory, even on today's enormous base.
That is a massive acceleration. So let's unpack these specific forces that will get us from around 600,000 units today to 800,000 by 2028. What are the key future drivers?
We can isolate three specific ones. First, the continuation of that dominant force, reshoring. As governments keep incentivizing supply chain resilience, this structural demand will just persist and grow.
That makes perfect sense. Reshoring demands automation as its offset. The second driver must be pure technology, right?
It is. The second key driver is the critical rise of AI integration into the robot's functional stack. We're moving beyond simple, pre-programmed motion. We're seeing AI-driven vision and advanced quality control becoming standard.
What does AI-driven vision let a robot do that a traditional sensor couldn't?
It allows for variability. Traditional vision might only identify one fixed flaw. AI vision, using deep learning, lets the robot inspect for highly variable flaws, subtle surface irregularities, minor defects, without needing to be reprogrammed for every single permutation. It dramatically enhances the robot's usefulness.
And the third driver you mentioned focuses on market access.
Exactly. The third driver is the mass expansion of collaborative robots, or cobots. Cobots are revolutionizing automation because of their accessibility. They're smaller, more affordable, and way easier to program than the massive industrial arms.
Why are they so much easier to program?
It comes down to advanced safety and intuitive software. Traditional robots need cages. Cobots, however, use integrated force sensing and torque limiters. If it bumps into something, like a person, it stops instantly.
So they can work alongside people.
Right. And crucially, their software often allows a user to literally teach the robot by physically guiding the arm through a motion. That saves months of complex programming.
That's fascinating. Lower cost, integrated safety, teaching by demonstration. That means a small or medium-sized enterprise, a local machine shop, can now adopt automation.
Correct. Cobots dramatically lower the barrier to entry, broadening the user base and driving a huge new segment of that projected 800,000 annual installations.
So the future is fueled by strategic necessity, increased intelligence, and dramatically increased accessibility. That paints a very complete picture of the factory, but the story doesn't end there. The most transformative change is happening outside the factory. We started this deep dive talking about how robotics is now a full-stack industry. And while industrial robotics is that $16.5 billion core, the true paradigm shift, the one that could fundamentally change daily life, is the move into service robotics.
That's the crucial transition. Service robotics is the expansion of automation outside the secured, controlled manufacturing plant. It's taking what we've learned in the factory and applying it to the chaotic, unstructured, real world.
The technical demands must be exponentially higher once you leave a controlled environment, where the lighting, the parts, everything is consistent.
They are. The environment is the fundamental difference. Service robots are broadly defined as machines that perform useful tasks for humans or equipment in professional domains outside the factory. It's an immense umbrella, spanning everything from professional floor cleaning machines to logistics robots to highly specialized medical devices.
And the moment you step outside the factory, you need adaptability, decision-making, perception.
Precisely. And that brings us back to the core engine of this transition. AI. The source analysis confirms the next wave of functional capability is tied directly to AI-integrated systems. Without AI, the robot is stuck doing one thing. With AI, it gains context, spatial understanding, and the ability to handle unpredictable events.
Can you break down that functional necessity? What specific AI functions enable a robot to work outside a factory?
Sure, take a logistics robot in a busy warehouse or a delivery robot on a sidewalk. That robot needs complex SLAM capabilities, simultaneous localization and mapping, which relies on AI to process sensor data and dynamically update its location and surroundings. It needs AI-driven object detection to classify objects. Is that a human, a pallet, a dropped box? And it needs decision-making algorithms to plan a safe route in real time.
So AI lets the robot transition from just performing a repetitive task to performing a complex contextual interaction.
That's the convergence that allows service robotics to explode into so many different domains. It's a shift from isolated brute force automation to complex interaction and dynamic problem solving.
Give us some concrete examples of where this is happening now.
Look at healthcare. Surgical robotics, like the Da Vinci system, allow surgeons to perform minimally invasive procedures with dexterity far beyond the human hand. That's a crucial professional service enabled by complex sensor fusion and control systems.
And in logistics, moving goods through a facility.
That's where autonomous mobile robots, AMRs, come in. Unlike the old fixed-track vehicles, SMRs use AI and sensors to navigate without fixed paths, optimizing their own routes and sharing space with human workers. It's transforming distribution efficiency.
And what about infrastructure?
Think inspection and maintenance. We see drone systems using AI vision to inspect wind turbines or bridges, identifying microfractures a human might miss, or pipe crawling robots for infrastructure inspection, reducing the need for costly manual access.
This expansion is staggering. Why does this all matter to our listener right now, particularly if they're tracking investment cycles?
It matters because the data on both the industrial front, that $16.5 billion capex, and the service front, shows that smart capital is positioning itself to benefit from sustained automation across both production and service lines. The companies specializing in AI-driven perception, collaborative interfaces, and systems integration are primed to capitalize on the mandatory reshoring trend and the explosive growth potential of the service economy.
It's an investment signal that's hard to ignore. This isn't a speculative wave. It's a structural necessity driven by macroeconomic forces that will intensify.
The transition from reliance on manual labor to reliance on augmented intelligence and automation is already the core assumption built into the future of global production and, increasingly, professional services.
This has been a truly immersive deep dive into an industry that is transforming global economic infrastructure faster than most people realize. Let's quickly recap the sheer scale of what we've analyzed.
Right. The critical numbers establish the magnitude. A global market value hitting $16.5 billion in capex in 2024.
And the volume of new deployment is just stunning, with 592,000 new units installed globally this year.
And that geographical reality is undeniable. Asia accounting for 74% of all new installations. It shows you where the momentum is.
We've established the drivers are fundamentally economic labor shortages, rising wages, but the real acceleration comes from strategic mandates like reshoring, which necessitate aggressive automation.
And if we synthesize the overarching theme, it's that the robot is evolving. Robotics is now less about brute force automation in a cage and much more about intelligence through AI integration and accessibility, through cobots opening the door to the SME market. This nexus of technology and necessity is fundamentally restructuring global supply chains.
We spent a lot of time defining the metrics of industrial robotics because it drives those massive financial returns. Efficiency and speed are easy to quantify. But the definition of service robotics machines performing useful tasks for humans outside the factory, that opens up a universe of possibilities.
Indeed, we've established the foundation in manufacturing. But if the goal of automation is truly to perform useful tasks for humans in professional domains that are currently untouched by complex programmable arms, we're talking everything from legal discovery to specialized construction to municipal services. So what professional domains currently relying heavily on human judgment and non-repetitive tasks will be the next frontier for this unprecedented wave of AI-driven adaptable service automation? That's the question that really defines the next decade of strategic investment and societal change.
Something profound to mull over until our next deep dive.